According to our Gamma, we're in for another volatile week. This is our second consecutive negative Gamma week, and it's also the week of monthly expiration. In today's video, we're going to revisit Gamma and we're going to build a trade plan for this week. Now here's what the Gamma exposure looks like for the expiration including March 21st. One more time, this is via our friends over at Bar Chart, and you can access this data for free. Now, if you take a look at this histogram chart, you should very easily notice just how many negative histogram bars there are. In fact, there's only a handful of places where we have positive gamma, essentially telling us that we should expect a lot of volatility as we head into this week. Now, unlike previous weeks, there's no clear large negative strike. It feels a little bit more diverse, maybe 5,700 if you had to, but otherwise you have a wide range from 5,550 to about 5,700 where this negative gamma spans. Now, to contrast, in case you're new to gamma or you haven't seen the February video, here's what gamma looked like for the Feb 21st monthly expiration. You should notice the stark contrast with the positive histograms here, suggesting positive gamma, which was a lower volatility environment. Now, different story that we ended up breaking through even below the level where we thought we would find support at 60.50, and we continued to see that volatility creep in. So for much of the week this gamma held, we saw price action. If you had the butterflies, a lot of them pinned towards 61.50. But as soon as that week ended, we saw volatility pick up into negative gamma, and that's now taken us into two subsequent weeks, which looks very similar to a gamma chart like this. Now we can also take a look at implied volatility here, tracking how that's changed. On Feb 21st, implied volatility was at about 11%. This is inside of SPX. Since March 11th, that's increased by about 8.5%. And if we contrast from the last time we did this to now, which includes March 21st expiration, we can see that this is slightly declined in terms of implied volatility by 0.53%, so more or less unchanged. We can see historical volatility has increased, of course, as a result of the volatility we saw last week. So that makes just logical sense, nothing to read into that. Our IV rank has decreased a little bit, and our IV percentile has decreased just a little bit. Now, I don't think this is any cue or indication for being able to take your foot off the brake. You can see our IV percentile is still very much high, suggesting we should expecting the same negative gamma volatility. Now that takes us for a quick reminder into what is our trade plan when we do see negative gamma. When we see negative gamma, we know that dealers are incentivized to sell the dip or buy the rip, meaning it's in their best interest to increase volatility, have greater price swings. Times like this, we created a game plan expecting a lot of volatility between the ranges of that gamma. This is a wide range in SPX, 5550 to 5700. But we then broke it down by time frames. How does our trade behavior change as the day progresses? Now, this is the same game plan from last week, which is the same game plan heading into this week. It worked last week, no reason why we should change course this week. Early on in the morning, we're focusing on opening range breakouts. I'll give you some examples of places where you might want to look at some breakouts in just a second. The second part of this, the V-shaped reversal setup, if you haven't seen the video from the second gamma session, I'll leave a link to it. You can find examples of both of these setups with visual rules. After that, from 7:30 to 8:30 a.m., we're looking for trend pullbacks here. This is essentially using longer time frame charts and capitalizing on intraday volatility. And later on in the afternoon, skipping the lunchtime hour, so we resume 10 a.m. Pacific, and basically going up to about 30 minutes prior to close, we look for trend exhaustions. Overall idea being here, we want to look for trends that have had the morning to essentially have their buy the dips, now they're exhausting, and we want to play the reversal. So the ORB setup helps us get long or short, whatever it is, early in the morning. After that, we're looking to take advantage of these pullbacks before we hit the lunchtime hour, and after the lunchtime hour, I'm looking for the fade or the reversal. That's all based off of this negative gamma environment. Now, before I wrap this video up, I want to share what I think are some good rising star candidates for the opening range breakout setup. Now, to do this research, I used the reporting functionality inside of our ORB setups platform, and specifically, I fed in the S&P 100 list here. I used that as my starting point, focusing in on the 15-minute opening range, and I backtested both 90 days along with the past 5 days. Overall idea, and eventually I added in 30 days as well, and I'll show you the results on the next page. But the overall idea here is to essentially find where do we have candidates where across 3 different time periods, so last week, the past month, and the past 3 months, we have seen positive ORB performance. You can see that with the positive trade expectancy, the positive win rate, the positive strategy ROI, and the positive strategy P&L. That's where, for this upcoming week, I want to focus on, have my attention to capitalize on the opening range breakout setups. I know it's already working there. I know it's worked last week in a negative gamma environment. I'm looking for it to continue to work this week into monthly expiration. So that's how I went through this process. That gave us some of these rising stars, which I think is a good starting point for those of you that might like the 15-minute breakout. You can take a quick screenshot of this. This gives you some examples of what you could use for a 15-minute breakout and what happened last week. And these are candidates where the 30-day and the 90-day performance has been fairly solid as well. For all of our ORB members, you can dive into this a little bit more in detail and also start to tweak things like the 15-minute and the 30-minute ranges, and also tweak things like which direction you actually want to backtest. Long shorts along with your risk tolerance. Here I did a 1-to-1 risk tolerance, but you could also play around with the 1-to-2. So one more time, a quick reminder of our negative gamma game plan. We start the morning by trying to take advantage of any places where we have the opening range breakout. That's what we're spending the morning doing, and we're going to let the ORB setup live scanner do a lot of that heavy lifting for us. If you trade the index markets, this is where we're looking for very quick jolts in and out, and that to overlap nicely with our futures volatility box models. So that's the morning. After the morning, we're looking to capitalize on any potential trend pullback opportunities before we hit the lunchtime hour, and that then takes us to the final afternoon, looking for that trend to exhaust and finally reverse. We've seen some of these sharper reversals with news catalysts as well. This week, with our March expiration, we should expect another volatile week. So far, we have the 5550 to 5700 range, and that very well could expand with this increasing volatility. Take care, everyone. Good luck trading, and I'll see you in our next update.